the gap fib and the stats and how I post my levels for that, like the fib levels for SPX. And then we'll talk kind of about range days and why like the 930 candles kind of is important. And if y'all have any questions, I do look at tickers. If y'all have requested tickers, so if y'all want to go, if y'all have a list of tickers, hold those until like the end, and we'll go through those at that point. So first, what I'm gonna do is I'm gonna pull up Weeble because this used to be on uh this used to be on TradingView, in which you could see in pre-market on a 5 minute time frame, you could see a liquidity print candle. And I don't know if I can go back far enough to when one maybe showed up. Here we go. So if y'all know how Webull and TradingView does their candles, the 8 o'clock candle is the same as the 8:05 candle, right? So what I noticed like a while ago, somebody actually brought it to my attention, but I did the research on it to like figure out that like this candle was very good at giving you um basically support and resistance levels for the day, right? And so typically what happens is once the candle is printed, if we get a close above, right, a 5 minute close above, then I'll take calls. If we do a 5 minute candle close below, I take puts. And so I gathered the data on it. And so I looked at all Mag 7. All right. So pretty much all of these. So SPY, QQQ, NVIDIA, Microsoft, Apple, Amazon, Meta, Google, Tesla, AMD. I didn't look at these, but all these were all looked at, right? So from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 tickers I looked at, right? Um, and so basically over time, a lot of them were 70 to 80% that once we closed in one direction or the other, it moved a, at least $1.50 of the underlying. Which let me pull this up. Where we at? So the average is actually higher than $1.50, but $1.50 for me was a successful trade, right? So on average, they pretty much move no lower than $1.97. A lot of them moving up closer to $3, at least 240, right? So, and which, like I said, you mark your high and low of that candle, and then whatever side that it prints, you take the position in that direction. So even here, right, if you were to get in here, you still got almost $1.66 move, even though I probably would have waited for it to come back down, right? You could have taken here and still ended up with a pretty decent trade, right? So same with the other side, we fall below, 5 minute candle below, you take puts, right? Take calls above, puts below. It's very, very, very simple. It is not hard. I don't care what this candle color is. I don't care if it's a long wick, short wick. All I care about is the high and the low of the candle, right? So over time, I don't know what happened with TradingView. Basically, they got rid of it, right? And so you no longer see it on here, right? You no longer see a basically I call it like a liquidity candle. You no longer see it. But on Weeble, you do have the opportunity to see it on Weeble. So on Weeble, right? I don't know if we did we print any good ones. So here, let's go to SPY. We'll go to yesterday, right? So on Weeble, it's the 8:05 candle. Just FYI, it's the 8:05 candle on Weeble. So you mark your highs and lows, right? And you take a position in the direction in which, so we have, we close underneath, you have taken puts on this trade, right? And boom, you had a nice move, $6 almost, right? And so, 6 dollars almost, right? 6 dollars. 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 6 dollars I got to update these stats, but I can tell you that your major ones, your QQQ, your SPY, your NVIDIA, your Microsoft, Tesla is a really, really good one. Um, they're all hitting at about an 80% clip, right? 80 to 90% clip. Uh, and so I like to I like to use this I like to use this on Fridays because of the fact that all of these pretty much are 0 days on Friday. And so it allows you to get a 0 day contract in which it moves, and when it moves pretty fast, right? And you get your 100%, 200%, 300%. All right. So we good there, right? So let's look at a few of them today. And so it doesn't, so let me go back to this. It doesn't always have to be uh where was I at? A long wick, right? It doesn't always have to look like this. Now, if it's, if it shows its hand that big, I'm definitely noting that ticker, right? And I'm paying attention to it. But there's sometimes where the candle may be a little smaller, right? And I still, is that my 805? Where we at here? 805 here. So that's a little smaller, but for me, it's the liquidity candle, right? And so what you have a drop here, right? You have a close in, came back out, close down, and how many points would this have been? From here to here, you got $1.88. And if that's probably about at the beginning of the day, it's probably about 50%, right? But then once it closed back down, you could have gotten this trade here, right? And now you got definitely 100% trade there, right? And so you can kind of use SPY to trade SPX, just FYI. So if you don't trade SPY, you trade SPX, you can just look at SPY to kind of give you an idea of, where to go, right? And so here you not only had this way to take it, right? You also had this here, right? You had two moves, right? Everybody following? All right. So now when it comes to risk management, right? I'm going to say that for this specific uh, trading this specific trading strategy, right? If I take it in one direction, I'm looking for anywhere between about $2 to $3. Even though a dollar move is successful for me, I know that on average it moves at least $2, right? Once it moves $2, I'm pretty much taking off, right? I'm taking off positions. And even if it moves a dollar, if it's not quick, I may I may close some of my positions in order to get that profit into my account, and then I risk management the rest. As far as your stop loss goes, if we close one side, right, my stop loss would be if we close on the other side, if I haven't already closed my contracts, right? So in this situation, if I would have taken puts, I would have closed before we even got here, right? I would have closed down here somewhere. In this situation here, if you got in here, I would not have closed because we didn't have a 5 minute close above this level. So I either would have added, or I would have been watching it to make sure we didn't get a close, right? And then I would have rolled it down. So that's pretty much how I do my risk management. I size the same way every time. So my average size, for example, not my specific average size, but every average size should be the same. So if that's $500 a trade, that's $1,000 a trade for you. That's $200 a trade. You find the contract that is in your budget, right? And the reason why is when you trade statistics, right, you have to use the same position size. So if you take a loss or you take a certain amount of losses, right, you're covered by the amount of you're covered by the fact that the statistics typically will weigh in your favor, and then you get the same amount. Like you only lose the same amount each time, right? So if I size for zero and my position size is $500 a trade, right, and I take 10 trades, 81% of the time I'm going to hit my you know 100%, right? So that means that I've profited, right? 3,200, I've only lost 800, right? So, or 8 times 4. Sorry about that. 8 times 5. Let me get my math right. So eight. Each position size is 500. You have 8 wins, right? But then you have uh 2 losses, right? And if that's if you're size for 0, right? So that would be a situation that and that type of thing. And so that's why I use the same position size because I want to make sure that my data is in my favor, right? All right. So now, as far as entries goes, right, I always enter on the first 5 minute close, right? That happens, right? So this did not close. This 5 minute close closed inside of here, right? So I wouldn't have taken that trade. I would have waited for here. Now, when we have bigger wicks, right, situations like here, you can either enter on that first 5 minutes or you can wait until we get back into this here, right? You can wait until we get back and then make a decision. So a perfect example would be I think Tesla did it. No, who did it? Did QQQ do it? I'm trying to find one. All right, here. All right. So this was one. So we have our 805 candle here, right? We closed down here, right? Well, this is very, very far on the first 5 minute candle. I would have waited until we got some type of direction here to close back out of it, right? And so we end up not closing back out of it, closing to the top. And from the top, from here to here, right, you got your $2, right? Trade done, right? Now, some of these run all day, right? Some of them run all day. Like this is an example of it running all day. But I wouldn't always expect that, right? So this one happened to do it. But there are days when you may get a move to both sides. So here, right? If the idea is I'm looking for a $2 to $3 move, you got one here, you got one here, and then you got another one here, right? Make sense, everyone? Any questions so far? Now there are days, right? I think this is actually Tesla cut off. Tesla actually happened. What was it yesterday? Tesla was a good one actually. What day I was talking to somebody about Tesla? Was it Friday? Uh, who hit me up my DMs about looking for one specific. Nvidia. Here we go. All right. So Nvidia on 3-4, right? You had your candle there, right? Now on 3-4, a lot of them actually went down, right? But Nvidia kind of stayed inside. You would not take any of these trades. You would just let it relax, and then boom. As soon as it went, right, you got your $4.45. So this is a very patient strategy, right? And it's one that like you just wait. Like there's no problem with waiting because once it happens, once it gives you your trade, you take it and you move on, right? And so this you would have been waiting all day for this, right? Set your alerts. Soon as 12:05 hit, it moved. Now if we start getting to the end of the day, right? Be very mindful at the end of the day of how much a stock can move if it's already, you know what I mean? And so I don't typically take these after a certain time. So pretty much after about 3 o'clock, I just or 3:30, I kind of leave these alone. Just because of the chances of it moving enough for me at the end of the day may not be a lot unless it's unless it's like one of those days where it just pushes, but I'll just leave it alone. I try to take my trades in the very first part of the day or lunchtime. So no nothing really under 3:30 is the latest I would take something if it pops out of this box, right? This liquidity box, if you want to call it that. Now, the other thing that you can do, right, is that you can fib this level here, right? So you can fib it and you can take trades off of the levels in here, right? So you can take trades off of the 50% or whatever percent or whatever, fib levels that you like. And you can take your trades there. Because a lot of times what'll happen is if we open up above it, we'll come inside, hit a fib level within that box, and then go back into that direction. Make sense for everybody? And as you see, right, every day we don't get a good one. So you can still mark it and still use it, right? Let me delete all my level, delete all my. You can still mark that candle, right? But the ones I like are when they have, bigger liquidity. But when it's a bigger liquidity box, I feel more comfortable. Right? Even though here, right, you still got your move up, still got your move down. But sometimes if that support and resistance is too small, I kind of don't like it, right? Because it could go both ways really, really quick. So if I had to pick what I would rather use, I'd rather look at something like this, right? Um, versus something like the other day, right? Or something like this, right? These are to me, these are your better ones here. Like I said, and so just keep it very, 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 very simple, y'all. Very simple. So I'm just marking the top and bottom, right? We close above one. If we close above, I take calls. If we close below, I take puts. And I just look through my mag 7, whichever ones look the best to me, and I look at it from there, right? And so the good thing about this, right, is that knowing that if we potentially that we can move in a specific direction, right? If you see one of the admins call a certain trade with using these tickers, you can use that to your advantage, right? So if you see that, okay, 33 said puts on AMD and it falls below the liquidity box, right? That gives you an idea that okay, we're probably going to move about $1 or 2 that day, at least in that direction. Take the trade, right? So also, if it's like, if we have something that's called in the McLovin Sundays, right? We're looking at calls, we're looking at puts. Look at that ticker every day for that week and just use that, you know what I mean? Plot those levels and use that in addition to already the information that that 33 only bags, Joe, myself or anybody else who, talk, goes through the other tickers, use it kind of in confluence, right? Any questions so far? All right. If it's no questions, I'm going to move over to the 350 candle and how to trade the 350 candle.
I got a quick question for you, RS.
Yep. Go ahead.
In your liquidity box, do you ever take any calls or puts, or do you wait until it breaks on either side?
So yeah, so I'll say this, right? If it goes, I'm trying to look for an example. Uh Let me see. All right, here's an example here. So you got a situation like right here, right? If we came into here, right, or we opened up far away from that liquidity box and we came back inside, I would take and if I feel like we're going to be like short that day or long that day, I'll take a position off of the 50% level of that liquidity box, right? So if you mark out your liquidity box and you just figure out where 50% is, so say 50% was right here, right? Say that this is not 50%, but say this was the 50% line, right? I would have had an order waiting to see how we reacted to it, and then I would have took the trade back down. Same if we were going to the upside, right? Does that make sense?
Yeah, thanks.
Yep. But you have to be mindful because if you have a situation like What was it? What day was that? 3, 4. You have a situation like NVIDIA, right? In which you have here, right? If say if we opened up down here and we went and we just the market was strong and it crossed above, right? If you would have took shorts at that 50% level, right? You would have gotten, you would have potentially got knocked out, right? Or you might have had a little gain, but then if you didn't take it, you would have got knocked out. You would have got stopped out, right? So you have to be mindful of that. So uh it's one of those things that you can use discretion, right? Knowing that you have, but the idea behind it is the data is based off of if you close above or if you close below. If you take anything in here, you're front running. Makes sense? Like,
Yeah, that's good. Thanks.
all right, no problem. All right. Is any more questions? Any more questions? All right. Where's my little notes at? What are my notes? All right. I already know what I want to do. All right. So the next one is the 350 candle, right? So I know there's some questions about how to trade it and what to do. So this is about SPX, right? So basically, I've gotten questions about like, do I look at like the MOC numbers? I don't look at any of that, to be honest with you, because by the time I look at that and I make my trade, I probably would, it'll take me too long. But what I noticed that is that I think around what it was 2024, 2025, right? Or 2020 is 2025 now. So around 2023, 2024, I noticed that this candle a lot of times can give you an idea of where we end up going, whether it closes green or red, right? And so it's a percentage. It's letting you guys know it's a probability. So it's probabilities that it doesn't happen, it's probabilities that it does happen. There are days where there's higher probability that it will happen. There's days where it's 70%, 60, high 60, 70% that if it's a green candle, we're going to continue in that direction at least 3 to 5 points, at least. There's days where if it's a red candle, right? There's and if it's a red candle, we're going to continue down, right? At high percentages. But just what they have, just like I have a high percentage, there are days where on those high percentages, it does the total opposite. That's the 30%. So we have to understand that and know that. And so this is another one where this is a high risk, high reward type of trade. When it hits, it hits. You guys saw all last week, right? All last week, whatever candle it showed, it pretty much went that direction. When VIX is high, this is a very, very lucrative type of trade, but it's at the end of the day and it's high risk, high reward. So I tell people only play with small amount of profits because this is your cherry on top of your sundae, your extra cherries. You already got one cherry for making profit throughout the day, right? You beat the market. So you got to be mindful of not giving the money back by over leveraging, right? Because you don't have to. You can take $100, $100 contract, right? Or $50 contract, and you can make it 300, 400, 500, or even take a $50 contract and make it 150. That is still a 200% trade, right? Who is crying over 200% trade? So, but then as we go through it, right? If we have 4 or 5 days in which we, have continuations, right? I'm expecting the law of averages to break to not to have a losing day. So for instance, today, right? Today was a losing day, just being honest. I don't think uh moved we didn't move $3. So this would have been a losing trade. So how I do this, right? Wait for the 350 candle to close. I'm always looking at SPX CBOE. That is what my data is based off of. So that's important because other US 500, ES, SPX, SP, right? I think it's this one. SPX, TVC, they can all give you different color candles on that 350 candle, just FYI. So my data is based off the CBOE. In Weeble, it's the 351 candle, just like the 8 o'clock candle in TradingView is the 805 candle in Weeble. The 350 candle is the 351 candle in uh Weeble. It's just how they they show it once the candle is, I think, closed, where we show it at where TradingView shows it as the candle that opens. Just FYI. So when this candle is printed, there are two things that I do, right? I wait for it to close and I fib it. The reason why I fib it is because I like to get in on retracements, right? Because what do we know about retracements? It offers you price and discounts, right? So if this is the candle, right, I can take a trade here, right, at using a breakout, or I can take a trade here on a retracement, right? The price of that contract up here is going to be high, especially if I have a green candle in calls versus those contracts being cheaper down here, right? So I just spoke about the first entry, right? When you're doing the strategy is getting in. Freedom, are you in? Yeah, Freedom. We're talking about the 350 class now, the 350 candle now. So I'll just repeat myself, Freedom, for you. The 350 candle, right? What I do is I look at the candle color. And once it closes, it gives me an idea statistically of where price is going to go for the last 10 minutes of the day. It doesn't always go that way for the last 10 minutes. It may go for the next 3 or 5 minutes and then reject, right? It may retrace and then go that direction, right? But I'm expecting some type of continuation or, in that direction based off of that last candle. And I'm using the statistics, the historical statistics, to give me an idea how often that happens. Right. So there are days, right, where it happens a lot, right, or it happens at a higher probability, right? So a Tuesday, a green candle may give me 60% odds that we're going to continue up at a 60% odds. A Wednesday, red candle may give me better odds to say that we're going to go continue down if I get a red candle for the 350 candle. Does that make sense, everybody? Does everybody follow me on that? Well, I'll go through some to kind of show you guys what I'm looking at, right? So the first entry, right? The best entry that you can do when you're trading this is getting in on the retracement. The number one reason why is because you're getting these contracts at a discount. So if we would have tried to get in here on a breakout, or even when price closed, right? You $1.91 probably would have gave you 25%, right? At the end of the day, right? If you got in here, right, at this 0.618 level, now you're looking at $7.10. That is more than a 200% trade in 2 minutes at the end of the day. Just FYI. Everybody following me? All right. So the best way to enter this, I'm going to tell you, is to allow price to retrace back into that 350 candle. That is the best entry. Now, there are days where we don't get a retracement, right? There are days that we don't get a retracement. So there are days in which what day was it? Was it Monday? All right, here. Monday was a retracement day, right? 350 candle, pivot, hit all the way to 0.886 and moved on, right? So you had either your less risky entry here, right, on the retracement. You had your more risky entry here if it's a breakout, right? So a breakout would be if you enter in once we break the high of that 350 candle, right? So your first entry is basically retracement. Your second entry could be the breakout of that 350 candle if you don't get in the retracement. Your third entry would be as soon as the 350 candle closes. So if you were to enter here instead of, so you got three entry types. Retracement, right? That's one. You've got breakout, that's two. And you've got once the candle closes, that's three. All three happen. I can tell you that we retrace into this candle almost 70% of the time. So there's no reason for you to have to like trade the breakout, right? Because there's a 2% chance that we're going to your 805 candle fib setting on the same use for 2 p.m. Uh no, they're a little different. They're a little different, but you can use them, Cray. You can use them, but they're a tad bit different. Not of any importance, to be honest with you. All right, does that make sense to everybody? So let's fly through some real quick. All right, we'll just look at a few. So this was green, 350. Boom, we pushed up. And with VIX elevated, y'all, you'll see this happen. You'll see it happen more. So here, right, we got a red candle, right? Now we did retrace a little further than I would have liked, right? But if you know, right, and I'll share my fib levels, right? We retraced, we hit a fib level, and then we went into the direction, right? So this is why I say if you're going to use this, right, you almost have to trade that. You can't just pick and choose when you want to trade this to a certain extent. I mean, you can do whatever you want, it's your money, but um, only size for zero. That's all I say. Size for zero. Only use profits. Never over leverage. We'll keep on going. All right. What was this? 350. Right. So here, boom, came on down. Now this one would have been better to get on the retracement, right? Even if you got in on this retracement, we came down. You got you what? It's your 9 points. Close candle 6. Breakout 6, right? 617 or 6. All right. So you see the benefits of getting in on a retracement, y'all, is you get a lot, you have the opportunity of a lot more points. And just so you guys know, let me see what I have it. So all right. So basically 82%, 82.5% of the time, we retrace, right? If we're going to continue in that direction. 73.74% of the time, we retrace to these levels, right? So I wouldn't even, if it retraces this far, I would leave these alone, to be honest with you. Let's see what we got here. 350 candle, red. See the benefits of the retracement, right? So 769 was your get in at the close of that candle. Breakout would have been 747. You got it at the retracement at the 0.618 level, you would have gotten almost 10 points, right? Makes sense to everybody? Everybody following? I'm assuming that's a yes. All right. So that was, I need to find, oh yeah, I need to find my, all right, here we go. There we go. Settings, hourly opens. Okay. So if y'all go back to, and I'm gonna share this with y'all. So one thing that and I don't want to get too into this, but one of the things that Price likes to do is because Price likes to range. We'll just say that, right? If y'all know how many times in a year, percentage wise, do we trade? Somebody give an answer to that? 15%. Oh, Cream said we range all the time. So it's yeah. So some people say 15, some people say 20%, some people say 30%. So I know, right? 30% of the time we trend, 70% of the time we range, right? Now the idea is to figure out when do we range, right? So you guys, I know you guys look at US 500, right? We like to range a lot, right? Asian session, right? Our London session, and we get some type of movement. We range again, right? Same thing, right? Range, right? Range, right? So if I know that, right? If we're ranging, that means if this candle starts here, right? Opens up here, comes down, goes up. That's 1 hour, right? The other candle comes up, comes down. That's another hour, right? Ranging, right? What do you notice? Where we opened at, right? A lot of times where we open an hour or a 30-minute time frame, right? We like to come back to that within the day, right? So drop something in here. Drop something in the chat for y'all, right? So earlier today, around uh around 2:43, right? I think it was like, yeah, around 2:43. Let me do this. I noticed that, so this was 2:30, right? I noticed that we hadn't knocked out some of these hourly opens and these 30-minute opens, right? We hadn't knocked them out yet, right? They hadn't been touched within the time frame that they're supposed to be touched, right? So if we look at, so if y'all look at what I just posted, right? The 1 o'clock open, I'm expecting price to go back to it from 1:30 to 4 p.m. 72% of the time. The 1:30, I'm expecting price to go back there, right? From 2 p.m. to 4:15 p.m. 73% of the time. That does not mean that's going to go there instantly, right? But it does give me an idea that if we're not going lower, right, that we potentially could go higher and knock and touch those opens, right? Now, if I know that, if you look at what I just posted, the last 10 days, we've been at like 60%. So if we're supposed to do 72%, that means that we're underperforming, right? And with us already putting the low, us around 230, right? And I see these have not been touched yet. I'm going to look at taking an entry back to the upside once I get some type of entry type of, once I get an entry that I'm looking for, right? So around 243, I said that, hey, we could potentially go up higher because we had a lot of hourly opens not tapped, right? So that is what I was talking about, right? I was talking about the fact that because we typically like to range, right? We had already put our move in for the day, right? We basically range here, right? Even here, 9:30, pushed up, came back into the range, right? Even the other day, right? Pushed down, came back into the range. Now, did it pop out of the range? Yeah. But for the most part, if you look at from here to here, still arranging. So when I'm trading this, right? And there's no entry strategy for this, right? You have to use whatever entry strategy that you're looking for, that you use, or if you know that if you see one of the admins call out something, right? Say if you see that at 2:30, right? I think 30:33, didn't you call something out around let me go back up. Let me go back up. You called something out. But you called something out, right? And uh knowing that if we haven't hit hourly opens yet, right, you can use those as your targets. Does that make sense to everybody? You can say no if it doesn't, and that's fine. Like I can try to explain a little differently. So let me do this. Let me clear this out the way, right? All right. So 30-minute time frame, right? So I have this 1 o'clock, right? I'm gonna mark it. I know that this. So 1 o'clock, right? From 1:30 to 4 p.m. There's a 72% chance for us to hit it, right? That's the open, right? You're 1:30, right? There is a 72% chance. It says 70, but I haven't updated that. And so then you have your 2 p.m., right? All 70% chance of going to touch those within these time frames, right? So although you see at 115 we touched it, I'm not looking to get to it at 115. I'm only looking for price to get there starting at 130, right? So at 2:30, right? I was looking at the charts. I noticed that these had not been touched when they were supposed to be touched within that time frame, right? I see this here, right? Is this a reversal candle to y'all? This 2:30 candle? Anybody can answer. Does this look like a reversal candle to you guys? All right, perfect, right? So I'm gonna go down to a 5 minute, right? Now does it look like a reversal? Here we go. All right. So once 2:30 hit, right? I'm starting to look for us to go back to the 2 p.m., right? And what happens typically, right? So at once 2:30 hits, now I'm looking to go after the 2 p.m. open, right? Now what's above the 2 p.m. open? The 1:30 open, right? That hasn't been touched from 2 p.m. to 4 p.m. What's next? The 1 p.m. open. That has not been touched from 1:30, right? From 1:30 to 4 p.m., that hasn't been touched either, right? Y'all see what I'm seeing now? I'm assuming yes, right? So if I have these levels that hadn't been touched, right? What happens when people are short and they get squeezed out? Yes, kind of master money, kind of. So if I'm expecting us to go up, right? Once I knock out these, right, I'm going to knock out these, right? Because these people have to close their position, right? Because if you think about it, these people were the initial shorts, right? They came down, took profit, reloaded, right? Came down, right? So now they are who I'm looking to take out if I'm going long, right? So I use it as a domino effect, right? I've got my reversal candles right here, right? This candle was your reversal. This is a reversal candle here, a little reversal sequence. Knocked out all these candles, right? So now I'm looking for price to go up and knock these out, right? And knock out each open, right? So let's go ahead and move the candle over, right? So we'll shift it one. Boom. Next candle took all of them out in 5 minutes. In 5 minutes. So now this does not happen all the time, OG. But what you'll notice is that when we move with speed, it's because Price wants to knock out whoever took the opposite position. Just like the other day, right? When we, what was it? Here, right? So if I go to a 30-minute on what day was it? Tuesday? What day did my daughter have therapy? Right? All right, here's a perfect example, right? You got your 11:30 open here, right? You got your 12, right? Now this one took out this one already, right? 1 o'clock took out your 12:30, but this hadn't been taken out, right? Which is your 1:30, right? So what do you notice about price? Once it cut through, right? Knocked out everybody, right? And you'll see it happen all the time. You'll see it happen all the time. Let's see if we have another day. 12:30. All right, here we go. Here's another one. This actually goes to the upside, right? 1:30 open, or yeah, here's your 1:30 open, right? 1 o'clock open, right? Price when it wanted to move, moved up, took out all these, right? And then came back down when it was done. So just and so what I'm doing is I'm kind of giving you guys an idea, like when I'm talking and when I'm typing in messages, right? You guys are getting an understanding what I'm talking about, right? And what to look for. You know what I mean? We got a lot of people, and I know we'll talk about that a little later. But so when I put stuff out there, now you know the terminology that I'm using so you can understand what I'm talking about, right? And so now you can see, okay, if I say that, all right, it's we're looking at the 3 p.m. open, right? And or like today, right? The 3 p.m. open has basically from uh where is that? Here we go. The 3 p.m. open, right? This open here from 3:15 to 4:15 has almost a 75, 78% chance of getting hit, right? You got hit instantly, right? So if I say, hey, it looks like we're going to go up or it looks like we're going down, and you're trading in Q, right? And I'll say that, hey, we have hourly opens here or hourly opens there. There's a chance that that's what I'm targeting. Just FYI. Make sense to everybody? So let's go to SPX, right? So if you guys go to here, when I post this here, right? I post it every morning, right? And so what I look for is I post basically if we gap up or if we gap down, and I post the end of day stuff, right? So for those who've never been in my class or understand how I draw my levels, right? I'll take the 358 candle of the previous day. Okay, OG, have a good day. Have a good night. I take the 358 candle, right? And if we gap down, I fib from the top of that 358 candle all the way to the bottom of that 930 candle on a 2 minute once it closes. And here's my fib set right here. So I'm gonna leave this up so you guys can see. This is the fib set that I use for the gap fibs. I think it's in the Fib Factory channel, just FYI, in case y'all don't have a chance to screenshot it. I believe it's in there. Yeah, it's in there. All right. So if we are to gap up, right, I draw it from the bottom of the 358 candle to the top of that 930 candle once it closes. So if we gap down, I draw from top down. If we gap up, I draw from bottom up. Right. So in a gap down situation, your PZ is always going to be, so you have your PZ, which is your profit zone, right? That is going to be your negative coefficient fibs, right? So negative 0.236 to negative 0.618. That's your first profit zone. Your second profit zone is the next one, right? So negative 1.236. Negative 1.618. This is if we gap down. Your retracement zone, right, is going to be this area here. This is your retracement zone. Your opposite profit zone is going to be your positive coefficient starting with 1.236. So if you're looking here, right? If you're looking here and we said 64% chance of hitting, right? That's basically a 64% chance of us hitting this profit zone here. And then the chance of us hitting the opposite profit zone is here, which is 45% of us going up and hitting that. You also have your gap fill, so the percentage of us gap filling. You have the percentage of us going up in the morning, percentage of us going down in the PM, or going up and down in the morning, up and down in the PM. So in the morning time, right, we actually did both, right? We went up. We went down, right? And so AM session, I look for moves before 12. For PM session, I look for moves after 12. That's basically how I look at it. For it to be considered a move, it has to move at least 20 points. That's what that's what I like data collect on is if it moved at least 20 points. And so what I try to do, right, is I try to basically to make it kind of as unsubjective as possible. I try to look where it moved off of specific levels or when it moved after a specific time. So right, so here I would say that we started to move at 10 o'clock, right? For two reasons. You have, of course, the move started at 10 o'clock. Then you also have, if you fib from right here to right there, you have a fib retracement back on up, right? With that being said, there was still a 65 or 64.5% chance that we would go to PZ. So once we filled, once we got into about 50% of the gap, right, in the retracement zone, and we were rejecting, this was your time to get puts and target this, knowing that you had a 64.5% chance of hitting it. So there are other days that are higher probability, right? So you had days like uh I think, what was it? It's Thursday. Ooh, I'm losing my mind. Wednesday, did we gap up Wednesday? Yeah, here we go. So Wednesday, we actually hit both sides rather quick, right? Hit PZ, came down, hit OPZ, and we just ranged until we figured out a move to the end, for the end of the day. So right around 11 o'clock, 11:45, we started our reversal back up. Here, right, you got your OPZ up here, got your PZ here, hit the retracement zone, failed, hit PZ. I think it was like 70% for this, 76% this day, right? And then we end up going to hit OPZ to the top, filling the gap, right? And this was on Tuesday. So as far as entry goes, sorry, right? If we gap up or we gap down, I try to wait for price to go back into the retracement zone because again, that gives you price at a discount. And definitely if I know that we have a 70 or 80% chance to hit PZ or hit OPZ, right? I'm waiting for us to get in here and then to go back down. And so you'll notice it on certain days. That's we do that quite a bit. So I think this was this one day. Yeah, here. So here came back into retracement zone, moved up, hit PZ, hit second PZ, was in second PZ for a while, and then we dropped down, closed the gap, hit the OPZ. So just a quick review, right? Just remember if you're gap down, your PZ is going to be on the bottom, your OPZ is going to be on the top. If we gap up, your PZ is going to be at the top and your OPZ is going to be at the bottom with your retracement zone in the middle. Make sense, everybody? All right. Let me see what else we got. All right. Range days and 9:31 minute. All right. So this is for NQ, y'all. All right. So when y'all are trading NQ, and one of the things I want you guys to do, this is specifically for NQ traders, right? Find your 9:30 candle, right? 9:30, yep. And where we at? Where we at? Where you at? 9:30. All right, here we go. And draw a box there. If we range, right? A lot of times what you'll notice is we'll stay in here, right? We'll push out, we'll come back in, we'll make a decision. Either we're gonna stay there or we'll come back down or we'll reject it, right? See you another day. 9:30 candle here. 9:30 candle, came down, pushed back up, came down, pushed back up, came back inside, came back, couldn't get past the 50% level of it or couldn't hold past the 50% level, dropped down, came back into it, tapped it, went away, right? The reason why on range days of 930 is important because a lot of time price likes to go back to where we opened. Um, and it will pretty much use it as a magnet to kind of it's almost like a reversion back to the mean. Right. It'll get away from it, come back to it, get away from it, come back to it, get away from it, come back to it. And you'll see bears and bulls fight at that 930 level. And I'm specifically talking about NQ. I think it happens on ES and US 500 too, but I know NQ is what I typically trade futures with, and that's what I typically use. Right. Let's go to another day. And so you'll notice that if we trend, we don't ever come back to the 930. Right. Let's see if we have one here. Oh, another one in which grab your 930 here, right? Push up, push down, push back up, use as support, and we flew, right? So master money, if we for your range days, right? You'll notice if it's going to be a like a range day based off of how often we hit the 930, right? So if you look at your chart, right? So let's go find so here, right? A range day versus a trending day, right? So you got your 930 in this 9 o'clock candle, right? What do you notice here, right? Here, actually, let me do this. This is your high of the candle, right? This is the high of the candle. This is the high of the candle, high of the candle. What do you notice there, right? Master and monies. Yep. Get further and further away from the 930. That's number one, right? Number two is the high of the previous hourly candle never is in trouble, right? Never goes back and touches it, right? Let's find us another trending day. This is kind of one, but I don't really like that one. Let me see if I can find. All right, here's a good one too. All right. Oh, here. Higher the candle, right? Higher this candle, higher this candle, higher this candle, right? So now here, the 930 was nestled in this 9 o'clock candle, but once we came back, right, we basically allowed the high of the previous candle basically gave us an idea where that the previous high could protect our stops, right? And so that kind of gives you an idea if the previous high doesn't get tapped or the previous, if we don't continue to go into that 930 candle, that pretty much tells you that we're trending that day. Now, what you can have is you can have a situation, right, where we're trending. Here, I'm gonna show you. You can have days where we're trending with not playing. Have days where trend and we don't have any major, we don't pull back to the previous hours, low or high, right? But then you also can have days where we trend, right? In which you have this hourly, and then you might have this hourly, and then this one may come back for a deeper retracement, and that's trending too. That's just trending with bigger pullbacks. But then you'll have something like this where you have the day starts here, we do this, we do this, and then we do that, right? And then that's going to be your range day. So the more times than not we stay in that 9 o'clock candle, The more times we stay in a 9 o'clock candle, which has a 9:30, it depends on where the 9:30 is in this candle. Because sometimes it could be here, or it could be there. I don't really know in this candle, but the more times we go in there, the that's how you can kind of consider a range day. Make sense, everybody? I think that was the top 5 things I wanted to go over. This has been a beautiful short, y'all. Any tickers that anybody wants me to go over? No tickers, and no one has any tickers that they want me or need me to go over. I'll look at some of y'all. This right here is like, I hate that it happened up here, but amazing reversal. Or not reversal, but entry. Star with a gap down. Uh, yeah. No, I think what's the one of the newer guys was talking about. How do you one of the newer guys were talking about. Who was it? One of the new guys was talking about Netflix. Yeah, I wish I would have been paying attention. Y'all, it's some. I'm just gonna just let y'all know. It's some great admins in here. This room by far has the best admins I've been in. I've worked with. Just FYI, y'all. Like just the amount of tools and the amount of skills that these guys have. Like it's we are as fully loaded as you can be in regards to an admin type of from an admin level. 33 has really put together the dream team, Monstars, you know, and everybody has their own niche. Everybody has their own uh way of doing things, right? But you know, even like I'm not even like I got crypto, but I'm not even a big crypto person. But I've been looking at V crypto. He's been in there killing it. Joe Schematic, Florida Hokies, like a lot of these new guys, they in here killing it. I can't wait to see what Razzie gets into because it's always good seeing people take small accounts to bigger accounts because and like manage it with the right balance between being risk management but also still being risky when the count because you have to kind of be risky when the count is small a little bit, right? So it's always good to see people do those like um but yeah. I'm trying to think. I think that might be everything. If no one has any other questions, I think um I think we can shut it down. Dak, Johnny, Master Money, Psych, Ron, y'all good? Witter Green, y'all good? Wiley, you good? LM, VM. And so and just FYI, because there's a lot of guys like I know me and 33 do a majority of like take EDU sessions. Um, I'm gonna figure out just how to get you guys these spreadsheets. I just you know want to make sure they stay in here, right? Because it's manual. A lot of it is manual, but I don't mind sharing with this group. You guys pay to be in here. I want to give you guys the stuff that I have, and I'm not. I like to share. Share the wealth. Um, and so it's just kind of getting you guys to understand what y'all looking at, and then you guys can play with it how y'all want to play with it. I'm trying to think. There was something else. Oh, as far as uh I'm gonna start look on. I think I'm trying to figure out what day I'm gonna do it. I'm gonna start looking at like tick trade options. I trade futures more so than anything now, y'all. Besides like um long dated calls and puts, but I'm gonna try to like help out the team as far as looking for certain setups and teaching y'all what's my favorite setup. It's usually on like either the daily or the weekly time frame. Sometimes I'll drop to a 4 hour, but it's typically on a daily or weekly. Um, but yeah, I'll start dropping those in here, and what I'll do is I'll try to correlate them when they're looking at specific stuff, so everybody's looking at the same thing. But all right, y'all. I'm gonna let y'all have whatever part of y'all night. Go enjoy y'all's family, man. I'm about to enjoy mine. See you guys. I'll be live tomorrow again. Uh, and so I'll definitely be typing in the chat. I'll say that. Yeah, it's a lot of information, y'all. So just I'm gonna just make sure y'all keep coming to the class because then it'll seep in and you'll like anything. And don't be scared to ask me questions, send me messages. I answer. Everybody know I answer questions. So whether you DM or whether or not, right? And if you DM me, if it's a question I feel like the whole group may need an answer to, not calling you out or anything like that, or point you out. I probably won't even say who asked me, right? But I'll try to share that information with the whole group so everybody knows. I'm sure if one person has a question, somebody else has the same question. All right, y'all. It's Friday. Let's make some money tomorrow, y'all. Green days, green weeks. Let's get it. All right, y'all. Have a good night.